Crossmark Global CEO, CIO Bob Dahl. Bob, you point out in your note that there were voices on the street that were worried about inflation, and I'm going to show just a couple of quotes in your note because listen, Nancy Lazar, I love her. I feel like sometimes Jeremy Granith is a little bit too bearish, but very few on Wall Street, the experts, saw any inflation. They were so sanguine about it. So does that explain this sort of knee-jerk reaction?
I think it does. First of all, I love your line, the Fed's field trip to the grocery store. I'm going to steal that one, Charles.
Okay.
It's phenomenal. Look, we had the report today all by itself we shouldn't worry about. The problem is it's now 3 months in a row where inflation's been hotter than expected. And so this quest for 2% inflation is laughable. We're closer to 4 than we are 3. We had been guessing we'd drift down toward 3, but even that could get to be a push here. And that's got to have the Fed, and obviously the markets today tell us investors are concerned.
All right, so this goes back to your predictions for the year. You've updated them. We could use this sort of as a scorecard. A couple things that have been checked off. Fed cut rates fewer than 6 times. Yeah, you were spot on about that. Certain sectors are outperforming right now. We know real estate, utilities, certainly under a whole lot of pressure. Some of the other things on here, let's just talk about some of the other things, particularly mild recession and unemployment above 4.5%. It feels like maybe we can get there, even though we pulled back a little bit in that last jobs report.
I thoroughly agree. Look, the lagged impact, people are tired of hearing it, of what the Fed did, raising rates from 0 to 5.25 in 18 months. There's still more to be felt. And that's part of why this inflation is so sticky and so stubborn, Charles. So I think that will continue to haunt us.
Earnings season right around the corner. You're looking for earnings growth. I think there's a double-digit earnings growth. Were you looking for that? And is that, I think it feels like it's going to be more bifurcated than normal.
I agree. I just saw that the top biggest 10 stocks are expected to have earnings growth of 34%. The other 490 minus 4%. So this broadening, as you see small stocks getting hammered today, is definitely taking a pause. Look, the consensus has earnings growth up 11% this year, 13% next year. Charles, I don't see either of those numbers coming true.
Right.
The only time the U.S. has had back-to-back double-digit earnings growth is off a recession low. We haven't had that. So I think the earnings numbers are not going to make it.
And you note, you're right, in your conclusion segment that, and I'm going to get the quote right here, predicting the end of a momentum run is a fool's game. So then how do you, Bob, navigate this market?
So until now, meaning the last 2 weeks where things are definitely changing, our view has been don't get in the way of the momentum because, to repeat, it's a fool's game to predict the end of it. But what you own is important. We want to own companies that can weather a storm whenever it comes. High earnings predictability, high earnings persistent, strong free cash flow growth. Those common factors are, frankly, more important than what sectors and industries you're in, Charles.
And listen, a lot of people newish to the market. I know that a lot of my newer subscribers, I got the emails this morning. They see all the red on the screen. How do you calm people down? I mean, it's easy to get caught up in all of this, and it's a lot harder, though, right? It's like I started the show. The moment of truth is the moment of truth. Everyone says the same thing. Oh, I'm in it for the long run. I'm a long-term investor, and we're down 1.5% like they're looking for the exits.
Stocks over the long term give you about 8% return.